the ASEAN Special Senior Official Meeting on Energy in Bohol. The country's balance of payments swung to a deficit in 2025 and came below the Bangko Central's full-year forecast. And as the peso continues to slide after reaching a record intraday high, the Foreign Buyers Association of the Philippines sees the weakening peso as a double-edged sword. For context and analysis, Luis Dumlao, economist at Ateneo de Manila University, joins us live. Officials of the ASEAN and Asian Development Bank have agreed to identify priority areas under a plan of action for energy cooperation. The Energy Department said the agreement was reached during the inaugural Energy Resilience Dialogue held on the sidelines of the Special Senior Officials Meeting on Energy in Bohol on Tuesday. Key points from the discussions will be elevated to ASEAN energy meetings ahead of a June 2026 Energy Resilience Roundtable. DOE Undersecretary Felix William Fuentabella said, energy resilience is among the urgent requirements as the region faces extreme weather, supply disruptions, and changing demand. Can the newest Malampaya gas find bring down the high energy prices in the Philippines? According to global petrol prices, a liter of gasoline in the Philippines as of January 12 costs $0.92. That figure is lower than the global average, but higher than in our neighboring countries, Indonesia, Vietnam, and Malaysia. Philippine electricity prices stand at $0.20 per kilowatt hours as of the fourth quarter of 2025. That's higher than the global average of $0.17, and in countries such as the US, Cambodia, Thailand, South Korea, Indonesia, and Vietnam. President Marcos says the recent discovery of natural gas at the Malampaya East 1 can supply electricity to over 5.7 million households for a year. So will energy prices go down? Here's what Senator Sherwin Gatchalian told Storycon yesterday.
No, it will not go down. No, I'll give you a direct answer. Because if you look at the formula being used by Malampaya, it's pegged to the world prices. So we're paying also the same, almost the same as the world prices. The only saving grace here is the formula. It has a feature there that it saves us from shocks that is happening outside the Philippines. We get stable prices but not lower prices. But on the other side also, we get energy security. We don't have to import gas anymore, as many gases as we need, because we now produce our own gas. And that saves us a lot of currency as well.
Meanwhile, the Department of Energy said yesterday it is monitoring drilling activities at the Camago 3 and Bagong Pag-asa 1 wells, which may soon follow the breakthrough at Malampaya East 1. The three activities are part of the Malampaya Phase 4 drilling campaign, which began last year in the hopes of producing new gas. In other news, the Philippines' balance of payments deficit in 2025 came in below the central bank's full-year forecast, despite a wider shortfall in December. Preliminary data from the Bangko Central show the BOP swung to a $5 billion deficit, reversing the $609 million surplus posted in 2024. Still, the figure is narrower than the central bank's forecast of a $6.2 billion gap for the year. In December alone, the BOP deficit narrowed year-on-year to over $800 million from a $1.5 billion gap. However, it widened from the $225 million shortfall recorded in November. RCBC Chief Economist Mike Ricafort said the deficit in December was partly due to the country's continued trade deficit. Meanwhile, John Paulo Rivera of PIDS pointed to subdued capital inflows and foreign direct investments, as well as sustained net outflows from portfolio investments. Another forecast downgrade for the Philippine economy, this time from Maybank Investment Banking Group. Maybank now sees Philippine GDP growth at 4.8% in 2025 and 4.9% in 2026. That's down from their earlier estimates of 5.6 and 5.8 respectively. If realized, these will fall short of the government's targets for 2 years. Maybank economist Azril Rosley said cuts in flood control spending, as well as broader DPWH budget consolidation, could derail the government's medium-term goals. Still, analysts said the lower end of this year's target is achievable if consumer spending, which makes up over 40% of GDP, rebounds. Maybank Securities Philippines' Kervin Sisayan said strong underlying demand could still support around 5% growth. Rosley added that if the government delivers renewed reforms and catch-up spending, it could lift infrastructure activity and domestic demand in the second half. For 2027, Maybank pegs growth at 5.2%, also below target. If the bank's projections until 2027 hold true, the country would miss its growth targets for a fifth straight year. Octa Research has reported a record single-quarter drop in self-rated poverty in the fourth quarter of 2025. Its latest survey showed 37%, or about 9.8 million Filipino families, consider themselves poor in December. This figure is lower than the 54% recorded in the previous quarter. Octa attributed the decline to year-end bonuses and continued government assistance. Meanwhile, the same survey found self-related hunger rising to 16% for the month, affecting around 4 million families. Incidence of involuntary hunger was highest in Metro Manila and the Visayas, both at 22%, followed by Mindanao at 19%. Joining us this morning is Luis Dumlao, economist at the Ateneo de Manila University. Good to have you back on, Luis. Welcome back.
Thank you for having
to
me.
the program. So what do you
Yes.
make of that weakening trend in the peso? We've seen it open a tad stronger at about 59.39, but we kind of chased the intraday high yesterday at 59.50.
It's scary because it's psychological, because it's near a threshold of 60 pesos per dollar. That puts some pressure on it. But if you look at the bigger picture, the peso is gaining strength elsewhere across against the top traded currency in ASEAN, the Sing dollars, against the top traded currency in Asia, the Japanese yen, against the second top traded currency in the world, against the euro. Of course, the top is the U.S. dollars. So it's across the board. So it's the famous politician said it's not the peso weakening, but it's the dollar strengthening.
But is it? I mean, there are a lot of drivers when you take a look at Trump's tariffs, Greenland, and the invasion, or the chaos in Venezuela. So that's one. And the other side is the governance risks in the Philippines. So how do we tease that out?
It's a general trend we've been seeing the past decade, that whenever there's uncertainty, whether it comes from the U.S. or elsewhere, the tendency for everyone around the world is to hedge and put their currency and asset in dollars, and that's why it's getting stronger. The dollar is getting stronger.
Right.
Yes.
A haven bid, you mean?
Yes, yes.
But let's just for a moment focus on what happened yesterday, chasing an intraday high. Two stops there of intraday highs just before noon, and it happens just after the impeachment complaint had been filed. To what extent is that the reason why there had been that kind of a selling in the currency markets?
It's more than anything else, it's a noise. And it is psychological because, again, it is near the 60 pesos per dollar and it is record high. But other than that, it's across, the numbers would say more dollars come in than go out. 2025, all theory would say that the peso would move sideways.
All right. Well, granted that the peso would move sideways, we're still at a weakening trend, and we're nearing senior citizenship, as I'd like to often joke. What then? would make you say that this is no longer an export competitiveness story, but a financial stability risk issue that impacts inflation, corporate bonds, or maybe even sovereign risks?
Okay, so if you look at what is referred to as the purchasing power parity theory, international finance. I'm gonna tell you about my age. When I was in high school, I never thought I'd see the day that inflation in the Philippines would be lower than that in the U.S. I never thought it would happen in my lifetime. You know what happened? Our inflation is lower than that in the U.S., Europe, Japan, all at the same time. How about that? And that's why theoretically it doesn't make sense for the peso to weaken.
But it is.
Yes, again, there is a noise, but so in the long run, it should move sideways, at least what that theory says.
All right. Well, the governor right now has got his hands tied. He's seeing that the peso is weakening near 60. Do you think he's going to make a run for it and just cut by 25 bips on February 19th?
There are two things, right? So GDP is, we are at negative output gap. So there is room for lower interest rates. Yeah. And the second one is inflation is, although albeit people complain about it, but it's very low right now. It's below the target. So there is room for inflation, for policy rates to go down. It would probably not go in favor of the peso, but that's not the priority of the BSP. The priority of BSP is inflation targeting.
Yeah, but we don't have inflation. I mean, you say people are complaining, but then we've got
Yeah,
it at
but
1.7,
that's the
and you
point.
even have your forecast at 1.4.
That's the point. By easing, by my 1.4% baseline inflation for 2026 is if nothing else changes. That's precise. That's why it will probably be higher precisely because the BSP will probably lower the interest rates.
So he's hard carrying the economy now. I mean, he's got to let the fiscal side do its job, right? I mean, he's been cutting. So it gives the impression that, he's
The fiscal side has no more.
hand carrying
The fiscal
the
side
whole
has,
economic
yeah.
growth story.
Yeah, but the fiscal side it's no longer spend more, but control the spending. Because right now, the expenditure, government expenditure to GDP is about 22%, which is as if it's spending as if we are still in pandemic, and we are way past pandemic. If my thinking is the official pandemic ended in 2022, and expenditure then relative to GDP was 22%. That was fine. It was it's the humanitarian thing to do to help people who have lost their living, right? So, but we're past pandemic, so these things has to be controlled. The spending.
Yeah, because at sub 25, when you compare us with the rest of the ASEAN, we're so much lower. When you
Lower
in terms of GDP investment
Yes,
to GDP.
it's lower GDP.
So that means how are we going to be able to reach 5.5% to 6% growth with reduced spending or spending like we're doing it during the pandemic?
I'm not saying we should be reducing spending, but the spending should. It's either I'm not supporting austerity of some nature, but rather to control the spending. Not to reduce the spending, but to keep it where it is as a percentage of GDP.
How so? With 6.793 approved in the national budget this year?
So that's obviously that's not a good start. So if we're gonna grow, if the spending is gonna grow by 6.7%, and GDP is projected to increase by about 5.8, so obviously less than the increase in expenditure. That means the expenditure relative to GDP is going to increase, and that's not. JFK once said, "The time to fix the roof is when the sun is shining. The finance sun is shining. We should be fixing it, and we are not."
Okay, well, let me ask you then about that gap because you said you expected fourth quarter GDP to come in at 4% for
Yes.
2025, and then a big jump of 5.6% of a full year growth forecast for this year. How are we going
5.8%.
to
Yeah.
get there then?
Yeah.
5.8%
Yes.
even.
Yes. It's one of those mean reversion. So eventually, if we just do everything normally, just don't do anything differently, just show up to a baseline, economy would go back to the equilibrium or steady state or potential growth, which is 6.1%.
Well, let's talk about the key drivers there. Consumers, for instance, let's pick up from the OFWs for a moment because it's just so important. With the peso falling to a record and hitting records, you would expect that the OFWs would get more bang out of their buck sending money home. But then the November data shows that it's come to a 6-month low. So what does that say about our OFWs? Kind of like saving the day.
It has been in absolute value in terms of dollars. It has been growing to what, 32 billion, 33 billion dollars per year. In terms of growth, it's for the past 5-8 years, it's been 3% growth, which is very low by this compared to the standards of the 20,000s when it used to grow by 20%. So that means we are becoming less reliant on them. We still need them. We're not going to belittle the need for OFW remittance, but somewhere out there, there's a puzzle out there that somehow more dollars come in than go out. The net factor income from abroad continues to increase by more than 20% per year. That means there's somewhere out there, there's a new phenomenon. It would be probably the retirees, what I refer to as the W-8ers, people who filed the W-8 file to make money, doing secretarial work here for American business and then getting remittance. So we have all these and then you have the remote intelligence work here and then getting remittance coming home here. So there's something out there, but it's no longer the OFW per se.
Or maybe something closer to home here when you talk about the consumer. I know that you cited as a concern consumer credit, which was picking up mid of last year. How is it looking right now with household debt? I mean, when you look at the non-performing loans, it doesn't seem like it's of concern because it's easing. But people, are they able to pay their debt, given a slowing economy?
It's the aggregation is that it is spiking. And it didn't the spike didn't start last year. It started about 5 years ago. Double-digit increases, 5 years in a row. It's spiking. The good news is it is still less than 1 billion pesos. And that is less than 1% of GDP. So even if that hypothetical thing that all of these default, the financial system would still be okay. But what's happening that we don't see is what's happening in the rural sector. People borrowing at 30%, 36% per year interest rates. No, they're not going to lose their houses. They're going to lose their credit card. Because that's credit card or the pangtawid card because that's been used as collateral. No, they're not going to lose their house. The financial system is going to be fine. But as far as the household in that poor sector is concerned, that's a major pain. And so that's where we should be, in a sense, losing sleep from the fact that these poor people are suffering.
All right. Well, I'd rather hold to the optimism in your narrative. Thank you so much,
Thank you.
Luis Dumlao. Appreciate it. Of Ateneo de Manila University. Well, you're watching Money Talks. Coming up, Double Dragon bringing Hotel 101 to Australia. And talks of trade war in Greenland dominate the World Economic Forum in Davos. World News comes right after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Heading to the markets, U.S. equities suffered their worst day since October after Trump's insistence on acquiring Greenland reignited fears of a trade war. The S&P 500 and the Nasdaq tumbled by over 2%, and the Dow fell by about 1.75%. The benchmark 10-year Treasury yields ticked up to 4.294%. Gold prices scaled the unprecedented $4,700 per ounce milestone as demand for safe haven assets were boosted by geopolitical tensions. U.S. futures point to gains when the markets open later tonight Manila time. S&P and the Nasdaq both up by 0.2% each, and the Dow rises by 0.8%. Asian markets, a mixed bag at the get-go this Wednesday. South Korea's Kospi trading near the flat line. Japan's Nikkei 225 down 0.5%, and Australia's ASX 200 falls by 1/3%. And a quick check on our own markets. PSEI opens this Wednesday lower by about 0.2%, 6,335. The stock market slumped for a third consecutive session, closing yesterday lower by over 1.3%. Mike Ricafort of RCBC attributes the sell-off to the peso's free fall and Trump's fresh tariff threats against several European unions over Greenland. The broader all-shares index tumbled by over 1%, with the sectoral gauges mostly in the red. Manny Ocampo of Investment and Capital Corporation of the Philippines sees the benchmark index hitting 7,000 this year, driven by falling interest rates, steady economic conditions, and regulatory reforms. As for the Philippine peso, it opens today stronger, 59.39 to the dollar. The peso posted its second worst finish on record yesterday, closing at 59.455 against the greenback. It hit an intraday worst of 59.50 and an intraday best of 59.42. One trader says players sought safer assets and concerns that Trump's tariff threats could lead to a trade war. The 10-year government bond yields ticked up to 6.065% from the previous close of 6.052%. The government is looking to raise at least $1.5 billion through a triple tranche offering of dollar-denominated global bonds. National Treasurer Sharon Alamanza said the target is at least $500 million each for the 5.5-year, 10-year, and 25-year notes, with proceeds to be used for general budget financing. The offering is set to be priced during the New York session, with settlement on January 27. Officials said market conditions remain favorable, but analysts warn investor demand could be selective amid a weak peso and volatile U.S. rates. In corporate news, Double Dragon Corp is taking Hotel 101 to Australia, building what's set to be Melbourne's largest hotel by room count. Double Dragon's Nasdaq-listed unit, Hotel 101 Global Holdings, has signed binding agreements to develop a 766-room hotel in Melbourne's Central Business District. The project, targeted for completion by 2029, will rise along Flinders Lane, a prime area famous for its laneways, street art, boutique shopping, world-class dining, and proximity to major attractions. It is expected to generate over 323 million Australian dollars in sales and will offer 4-star amenities at affordable prices. The expansion marks a significant milestone in Hotel 101's global growth strategy, targeting to operate 1 million rooms across 100 countries nationwide. The headlines from around the globe in Switzerland. French President Emmanuel Macron warns of a new colonial approach at the World Economic Forum as the Greenland crisis and the ensuing trade tensions grapple world leaders. Sporting sunglasses due to an eye infection, Macron says that a world without rules will undermine decades of collaboration, a pointed criticism on Trump without mentioning his name. Macron has urged the EU to activate its so-called trade bazooka or countermeasures to Trump's tariff threats. The World Trade Organization says all sides need to find a way to de-escalate tensions. Trump says he has a lot of meetings scheduled to discuss Greenland. In Spain, another train accident grips the country, this time in Barcelona, leaving at least one person dead and 37 injured. Regional authorities say a retaining wall fell into the tracks, causing the crash. This comes just 2 days after two high-speed trains collided in southern Spain, killing 42 and injuring dozens. And in the U.S., Netflix switched to an all-cash offer for Warner Brothers, Discovery Studio, and streaming businesses to keep Paramount at bay. From a mix of cash and stock, Netflix will now pay Warner Brothers shareholders $27.75 per share in cash for its film and TV studios. Paramount is still pushing its hostile bid for all of Warner, including its cable networks, recently launching a proxy fight for Warner's board seats. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.